name's Mandy Archer. I'm director for the Ridge Crossroads Small Business Development Center. This webinar is to review basically all the funding that's out there right now based off of the CARES Act, the Economic Aid Act, based Consolidated Appropriations Act, how all of that was put together so that we can try to help guide businesses, you that are joining us, in regards to what economic stimulus options may be available to you, okay? Do want to introduce my staff very quickly. I've got Jenny Plant on the phone or on the line with us. She's our administrative assistant. I also have Teresa Catron, who has joined us as a business counselor. Our office is located at Crossroads Institute in Galax. However, we do serve Carroll, Grace, and Galax with and Bland. So we are your contact information and can help. We help support Jennifer and John and Todd and all the other folks in that area in regards to business development. Really quickly, just want to tell you what we're going to be going over today. We'll introduce our partners that we're with today. I'm going to review the program timeline and just funding overview, the eligibility overview, application, what expenses are covered, what other programs may be available. We're also going to touch really quickly on fraud information that has become really prevalent in this day and time. How can our office help you getting a hold of us? And then, of course, we are going to open it up for questions. So let me say a few things. We have put all participants on mute as they come into the room. We do ask you do that just to avoid background noise. But a few things. You have the chat box that you will be able to type questions. If you think of something during the presentation, do not hesitate to type it in that chat box. We will read it at the end of the presentation and review those questions. We also will allow, you'll be able to unmute and clarify those questions if you need to clarify it more in regards to that. And also, again, you don't have to necessarily take frivolous notes on everything because we'll provide you with this. So write down your top needs and questions, and we can always talk to you at the end of the presentation to go over those. I do want to, of course, just tell you or, remind you, we are not licensed CPAs. We do not intend to provide tax advice. If you do have specific tax-related questions or even legal questions, we do encourage you to consult your accountant, okay? Because a lot of these programs have gotten into that, what is gross income? And we're going to go over that. But there are aspects to these various programs, and there are going to be tax implications that you need to be aware of. Again, I do just want to introduce my counterparts, my partners on this particular call. We're very excited to be working with Jennifer at the Withful with Bland Chamber of Commerce, Todd and I think Jeremy down at Downtown Withful Incorporated, John over at the Joint IDA, and I also have Anthony Edwards from Skyline National Bank joining me today. So all of these folks have either applied, they've been looking at these programs as well. I'm just the deliverer of the information, and they're going to stop me if something has changed or if I am delivering that in an incorrect manner. Because one of the things that I need to be upfront with you all about is that these programs get put out by Congress and the bills issued. However, they have dates on them, and then the guidance has to come out for maybe the Small Business Administration or U.S. Treasury. What I'll tell you is during PPP1, that Paycheck Protection Program first round, there were, I think, 16 to 20 interim final rules. And so there are clarifications that are made. There are changes that are made. There are challenges that we as technical advisors and bankers face when we're trying to help you. So we ask for your grace in order of what we're telling you. We're telling you the information the best we know it as of today, okay? Now, and again, this is going to be a complete overview. We'll again talk to you about how to reach us individually so that you can learn about, we can talk about your individual situations, okay? So just an overview, getting into it. The programs that are put forth based on the current funding for the Paycheck Protection Program is set to expire March 31st of this year, or when funds run out, whichever comes first. One of the very first requirement for you to be able to apply for that is you have to have been in business by February 15th of 2020, okay? Yes, all lenders are able to submit applications to the Small Business Administration as of now. I will put a couple caveats in there. That doesn't mean that all lenders were ready. And I did a first round of this last week. Most lenders weren't ready. I think most of them are accepting applications now, but I do want to put in there that, you know, they are facing challenges on their end with the portal. So it's not just that you submit it to the bank and the bank says yes and gives you the money. They have to submit that up to a portal through SBA, and there is a process, and that portal is giving a little bit of issues to them. So my friend Anthony said they've got a call this afternoon to hopefully address some of those, but they're working diligently to help you just as much as you are desiring the help. So patience is a virtue at this point. There are some different guidelines for what we would call PPP1 and PPP2, and they're retroactive. We're going to go over a little bit of that. A lot of people have said, well, I haven't gotten forgiveness on, I got a PPP1, but I didn't get forgiveness yet. That's okay. You just have to have used all of your PPP1 funds before your second round can be dispersed. And I'm going to look, Anthony's on my screen. Is that still a correct aspect, Anthony?
Yes, that's still correct.
Okay. So again, you have to have expended the funds, but you do not have to have forgiveness on the funds in order to get a second round PPP. Okay. The second round PPP, you can choose a covered period between 8 and 24 weeks. That is to be worked out with your lender as well. Just a little bit more information. There was $15 billion set aside for borrowers that have less than 10 employees or loans of less than $250,000. So what happened out of this second round of funding was they wanted to really target lower income areas. And you'll see that in a couple of rules associated with some of the other programs as well. There also is some more flexibility for seasonal workers and especially farmers. So if you have a farm and you originally did not qualify, you may be able to qualify now, even for a first round of money, because they've indicated there's actually some different calculations to use, whereas like farmers can use gross income, not net income, moving forward. And there is the ability for applicants to ask for an increase on their original Paycheck Protection loan, but only if a few criteria are met. And that's if you qualify for additional funds due to rule changes, not miscalculation by borrowers. So you can't have miscalculated in the beginning. And then also you can't have filed for forgiveness yet. So Anthony, I'm curious, just kind of, have you all had any of those where you're trying to adjust the first one, or has it primarily been second round at this point?
We've not had any PPP first round modifications.
Okay. And I don't really expect that to happen to too many people for various reasons, but I did just want to make that a point to know that it is an eligible rule associated with this legislation. So how do I become eligible is the biggest thing, right? You need to show at least a 25% or more reduction in gross revenue between 2019 and that same period in 2020. So it only has to be one quarter. And alternatively, you can use your annual gross receipts from 2019 to gross receipts from 2020. So again, just, we're looking at a 25% or more reduction in that gross revenue. So what is gross revenue that we need to count in that? It's from, whatever source that you use to get your gross revenue. So it's going to be sales of products and services. That's number one. And it's typically what's in that very first line of your tax return. Okay. However, depending on how your taxes are done, there may be some other things that need to be added, such as like interest, dividends, rent, royalties, fees, commissions, some investment income. So these are all things listed under the legislation that are counted in that gross income whenever you're making sure when you're doing those calculations. Okay. I want to point out rent specifically. I've actually talked to a few businesses that may be like a consignment type store where you have some of your own sales in addition to you have booth rent. More than likely, your tax return is showing all of that in your gross sales, but just make sure you're keeping in account all of those different areas of income that you get, okay? There are some very specific guidelines in regards to like dividends and capital gains. Again, we're trying to give an overview. If you have those types of things, we need to have further discussions privately, or you need to work with your accountant to figure out which of those type of income sources need to be included in your calculation. More importantly, what don't you include, right? What does not go in there? So if you have paycheck protection proceeds from the first round, you do not include those. You also do not include any type of advance going into there. The idle loan itself, while it's not specifically put in there, it is a loan. It's not really a gross revenue, so it's a different source of income. And then taxes collected for and remitted to a taxing authority if included in gross or total income. So think of a retail store, think of a restaurant, lodging. When you calculate your gross income, does that include the taxes that you pay, like sales and retail use tax or meals tax? If it does, you need to subtract those out prior to figuring out your gross revenue and reduction, okay? I don't think I switched. There we go. All right. Now, there is a caveat located on first-time borrower. So if you are a first-time borrower, meaning that you did not access those PPP funds on first round, you actually are going through that first round PPP. So you do not necessarily have to show a reduction in gross revenue, but you do have to attest that those funds are needed for continuation of business. So they're not there just for you to say, hey, I think I'm going to go for this because everybody else is. You need it to help going. You just didn't do it the first time for whatever reason. They ran out of money, or it was just you didn't have the correct documents in place in that aspect of it. So that's something we can also help you take a look at. And Anthony, I look to you if anything's changed to stop me, because we on that. So the other question that a lot of people have though is, what about other CARES money, right? If you remember on this previous slide, I told you what not to include. I did not include anything in there about like the Rebuild Virginia grant, or maybe your locality had CARES Act funding and you got a grant from them. Do I count that in my gross income? So what's happened is there's not been any specific guidance issued on those particular funding pools. However, the guidance does say that if it's going to be taxed, then you are probably going to need to include it as gross income. My rule of thumb to you is if you completed a W-9 for any of those funds, you're probably going to get a 1099, which means that it's going to be taxable income and you should not count it. But I am going to go over maybe some tips about calculating that 25% in just a minute. So don't worry about, well, I received this grant and it put me way over. So let's talk about that in just a minute, okay? So just, eligibility overview, again, just making sure that everybody's on the same page. When you apply for that second round, you are applying for 2.5 times of your average monthly payroll cost through the date that you apply. Now, Anthony, if I remember, I've seen some new guidance come out that there are some different regulations in regards to that employment date. One of the things I want to clarify is you're not necessarily looking at the same timeline of employees information. You're just looking to figure out if you qualify. So the gross revenue is one qualification factor, and then the amount is that average monthly payroll cost times 2.5. Okay. Now, there is actually a special fund set aside for anybody that has a NAICS code 72 that you're going to get 3.5 times, or qualify. I'm sorry, you're going to qualify for 3.5 times your monthly payroll cost. So anybody that doesn't know, a NAICS code is the North American Industry Classification System. And if you go, hey, I don't know what I am, my first piece of advice is to go to your tax return, take a look in the top left or right-hand corner, and there should be a code that starts with, a set of numbers, 117244. It varies depending on what your business entity is. And that's really the classification system that the IRS and other entities have to figure out where your business comes. And you may do more than one thing, but it's primarily your primary business income. If you don't have that written down, then you can take a look and say, well, do I fall into that? And if you do, then you just have to prove it with license and permits. And that 72 NAICS code is basically accommodations and food service, right? So if you're a restaurant, if you're a hotel, I think maybe B&Bs and some other types of entities qualify under that 72. And that's your primary source of gross revenue, then that is where you would qualify. Of course, one of the other things too is you have to have less than 300 employees for that second round of PPP. My understanding was they kept it at less than 500 employees for first-time borrowers. And then, but if you're in that special code of 72, then you have to have less than 300 employees per location. I doubt that we have anybody on this call who probably gets above that number. However, if we do, feel free to reach out, and again, we'll go over that. And again, the maximum loan amount for the second round of PPP per entity is $2 million. Okay. All right. And again, if you have questions, throw them in that chat box, write them down. We are going to hopefully have plenty of time to go over those at the end of this. Okay. So I told you I was going to provide with you a tip in regards to calculating that eligibility, because if you looked at your, some entities, if they look at their gross revenue for the year and they add that Rebuild Virginia in, or they add some other things in, then you may not have that 25% reduction. But remember that 25% reduction is for 1 quarter comparison, okay? So you may have received local CARES funding or Rebuild Virginia in August of last year or September, but maybe your lowest sales for the year were that second quarter immediately following our shutdown across the US. So maybe it was April, May, and June. So keep that in mind when you're looking at it, and you want to use more than one method. So if you look at your year and you go, I don't qualify, what I recommend you do is you look at more than one method. Now, you do have to look at specific quarters. You cannot choose your own quarter. You can't say, well, I'm going to say my quarter is June, July, August. It has to be based off of quarters associated with tax returns, financial statements. If you file a tax return that is not calendar year based, that may be like fiscal year based, there are some eligibilities to take a look at different fiscal calendar, quarter year, fiscal year, things of that nature. However, that's one of those really specific items. And what we have found out is each of you have very specific needs. So I'm trying to give you the overview so you can figure out what questions to ask so that we can help you determine the eligibility. Okay. Again, I reiterated that gross revenue does not include PPP 1 proceeds, idle advance, or that sales tax. Okay. There are different calculation methods in existence that you can do for businesses that open between January 1st, 2019 and February 15th, 2020. So if you remember, you have to have been in business by February 15th of 2020. But let's say you opened in September of 2019, something of that nature. You don't necessarily have the quarter-to-quarter comparison. The SBA has released guidelines of how to look at those calculations. And so we're not going to go over each of those individually. Those are a one-on-one need with either your lender or our partners or our office, okay? Do want to mention that when sole proprietors are trying to figure out if they have a 25% reduction, you can look at your gross income line, not your net profit line, right? So your gross income is that line 7 associated with what you're doing. If you remember, if you're a sole proprietor, you file that Schedule C. When you're going into calculation, if you're eligible, you cannot have a zero or negative amount on line 31. So you can't have lost money and still qualify, but you can look at your gross income, not line 31, in order to figure out that 25% change, because your deductions may have been different. So that is a change, or that's an update in some of the things that we're looking at. Okay. I'm going to go ahead and go over a few application overviews. I would ask my partners at Skyline to pipe in if anything has changed in regards to the application of what you're doing, except I am going to take a sip. So there are two different forms for second draw versus first draw, right? If you're on a second draw PPP, then you're going to use the application form 2483-SD. You can find it on sba.gov. You can find it online. I know many of our lending partners, including Skyline, have a page dedicated to that. We'll provide that information to you at the end of this webinar. If you are on the original loan, then there is a revised form. So you cannot use their first form. There's a revised 2483. Well, why is it revised? Because there's some new eligible expenses. Okay, we'll go over that in just a moment. Will additional documentation to substantiate payroll be required? Well, it kind of depends. Know if you're going through the same lender and you're using the same figures for the first as you did the second. I'm just going to go ahead and tell you, though, I think you should already have that stuff on file. Have it on file just in case the lender needs it, right? It's a whole lot easier to have it before you go to the application process than to try to scrounge for it following the application process. Do I have to submit proof of my reduction in gross revenue? Currently, the way the legislation reads is loans less than $150,000. So when you figure up your 2.5 times or 3.5 times payroll, if that amount is less than $150,000, while you don't have to show that reduction at this time, you will have to show it when your forgiveness application is submitted in order for that loan to be forgiven. Loans above $150,000, yes, you just need to go ahead and submit that verification or proof that you had a reduction in that gross revenue. And some people go, well, why are you calling this a loan? It's supposed to be a grant, right? Well, it's what's called a forgivable loan. So it means that you are receiving this loan from the lender, who will then, under the guidelines of SBA, the loan will be forgiven as long as you meet those requirements associated with the forgiveness aspect of it, okay? So keep that in mind. If you don't meet those guidelines for forgiveness, then part or all of the loan may have to be repaid to the lender. And if I remember right, is that a 5-year, 1% term on that?
Yes.
Okay. All right. What kind of documentation? I said, hey, you may have to submit some documentation for those certain loans. What does have to be submitted? And my understanding is only one set of these has to be is needed. But you may have, quarterly financial statements for an entity. And of course, if those are not audited, the borrower is going to have to attest and sign that those are accurate. You might be able to use bank statements showing deposits relevant to your gross revenue, but you would need to make sure to specify which of those deposits are gross revenue. And then, or tax filings. Now, of course, most of you should have your 2019 taxes done and be able to submit that. Most of you probably do not have your 2020 done. I'm not even sure you would have it filled out yet. But you can actually compute that 2020 return, and you can turn it in, but you have to attest that those values are the same that will be filed as your official return. Okay, so there are multiple ways. Are there any other ways I'm missing, Anthony, that you can submit that proof of gross revenue, loss of gross revenue?
No, I think you covered it all. I will say that a lot of banks are going ahead and asking for the documentation for the 150 and below, and that's not meant to be overbearing on the application. It's just meant to be very risk management in mind for the borrower to make sure that they see that up front. So, we get 8 to 24 plus weeks down the road, there's not a surprise waiting. So it's really good to just pull those interim P&L numbers or bank statements and double check. And that goes back to the risk management side for the customer, most importantly. So
yeah. Yes, and I will say that while some of the guidelines are issued, the local banks are the ones that are taking on the risk of this forgivable loan and upfront. So they may have they can put additional mitigating measures in order to manage their risk. So just keep that in mind, okay? And completely understandable. Thanks for addressing that. So what can I pay under the second round of PPP? And actually, this goes back to first round PPP too. So what they've done is they've extended those eligible expenses. So originally, you'll see on this left-hand side, you could do payroll, which would salary, wages, commission, tips, those types of things. You did have some employee benefits that were eligible, like retirement, group health care, and the employer portion of state and local. And I say that very distinctly because you cannot you can't put FICA, you cannot put federal taxes into that portion, okay? And because that's what they consider double dipping. You also could you could include leave, but as long as it wasn't covered under that Families First Coronavirus Response Act, and that was where you had to give employees off, or if you were a certain size business, you had to give employees off a certain amount of time if they were either exposed or had childcare issues due to the COVID-19 pandemic. Other expenses, rent, utilities, interest on mortgage obligations, with the caveat that all three of those had to be placed in service prior to February 15th of 2020. Okay. Now they have added some new eligible expenses. You could do covered operating expenditures like software and cloud computing. Many businesses went to telework options for many of their staff, or they may put in touchless payment systems, things of that nature. Those can come under those covered operating expenses. And I'm going to say something about that in just a moment about the time period though. Covered supplier costs, they're essential at time of purchase. So let's say you're a restaurant, you need perishable goods, and you're purchasing those can be covered under that second round of funding. Worker protection expenditures like PPE, potentially property damage. This one was a little bit odd to me, but because this is not necessarily a natural disaster per se, but maybe you do experience property damage coming up in the future for various reasons. They did also clarify some of those employee benefits and what is eligible. So you can now include group vision, group dental, group life insurance, and group disability insurance. Okay. How can it be forgiven? That's the part that I was talking to you before. It's a forgivable loan. You want to make sure that you do everything possible to ensure you don't have to pay that back. So to qualify forgiveness, you will need to spend 60% or more on payroll and no more than 40% on other eligible costs. Okay, so if you remember when we were talking about this, you've got your payroll and eligible expenses. If you spend 100% on payroll, that's fine. However, you cannot spend less than 60% on payroll, or you could, owe some or all back. Documentation, accurate records. Make sure that one of the things that has been very common in setting up these various programs is that you probably set up a separate bank account for those funds only for this time period, to allow you to track those expenditures in a much more accurate way. If you don't set up a separate bank account, you've got to set up some type of spreadsheet or something so you know what you are tagging to that particular funding source. We encourage you to keep all of those records, especially the employment records. They're actually saying you need to keep those for 4 years and 3 years for all other records. I don't know about you all. I'm told, I always had in my head 7 years for tax records, 7 years for tax records. I would just suggest you keep everything the same you would your tax records, okay? Also, just keep in mind that business expenses they're paid with the forgiven PPP loans will be tax deductible. So you can still deduct those from your taxes. Now, keep in mind when you're talking about these expenses that you're eligible to pay out of those PPP proceeds, it is for that designated 8 to 24 week time period coming up after the funds are dispersed to you. Okay. So I'm kind of going back to this. I kind of said you may have had to install touchless payment systems. I really misspoke when I said that. Maybe you're going to install touchless payment systems and you end up using some PPP funds for that. That's fine, but you cannot use it to pay back things. You cannot use it to pay yourself back. You're a sole proprietor and you use some of your personal funds in December to pay your electric bill. Can't pay yourself back on that. It's about any expenses that are incurred or paid during that time period. Okay. And of course, in order to be forgiven, you will have to retain the same number of employees as stated on the application. The application asks for a head count. As a sole proprietor, self-employed person, you count yourself as an employee. So if you are the only person in your business, you put 1 on that application. If you are the only person there and you have a part-time employee that helps you, you include that. It's a number 2. If you are the person there, but you contract with someone to do some additional consulting for you, but you give them a 1099, that person is not an employee. They are a 1099 employee. So this is where you have to go through, especially how you pay them and what's associated with it. Now, I will say there is some general safe harbor rules that were in existence, that are in existence for round 2. Like if you had to lay people off and you tried to bring them back and they just didn't want to come back, there are some safe harbor rules associated with that. So you need to be aware of those when you are looking at those expenses. Okay. So I know that we probably had some questions come up. If it's okay, Teresa, is there anything that we really need to address right now, or can those wait till the end so that we can review some of these other programs?
There was one question. For those of us who file joint taxes but have more than one business, can we use our Schedule C to show reduction of revenue?
Anthony, can you repeat that question again?
For those of us who file joint taxes but have more than one business, can we use our Schedule C to show reduction of revenue?
Actually, we may need to pull that person on at the end in order to clarify a little bit more, unless you're 100% aware, Anthony, of what they're trying to ask. Because I think you have more than, it depends on if that joint, is that a joint return with a spouse, or is that a joint return with, a business partner?
With the spouse.
Do what?
It's a joint return with the spouse.
Okay. So you're not worried about the joint return on the spouse information. You're only worried about the Schedule C. And it could be that you're looking at the Schedule C for each individual business itself. Is that a correct statement, Anthony?
Yes. And I think it'll come down to, I think it comes down to the tax identification number too. If you've got a Schedule C that is listed in the wife's Social Security number and a Schedule C that's listed in the husband's Social Security number, you can, I know I'm being a little granular here, but both can be counted separately under separate applications. And you can also use the Schedule C from 2019 or a draft of 2020 to show the loss of 25% reduction. Also, that comes down to EIN numbers too, if you're paying employees through EIN on separate Schedule Cs. The reason for me being a little granular there is we don't have clarity from the SBA yet. If you have 2 or 3 Schedule Cs and they're all tied to your Social Security number and you're trying to do a draw 2, do you count the individual 25% reductions on each business, or do you have to aggregate all of them? And we're waiting on some explanation there, if that helps in a kind of a expanded answer.
Mm-hmm. And we're happy to address that in a little bit more individual basis, and we'll circle back around at the end if we want to come back on with some additional questions to that participant. Okay. All right. If it's all right, I'll go ahead and review some of these others so that we can definitely leave some time for questions. Really quickly, just want to make sure you're aware of the other programs under the, like I said, the Relief Act that was passed. The EIDL, the Economic Injury Disaster Loan Program, that is open to new applicants. That is a loan. It will not be forgiven. It is a 30-year term, 3.75% interest. I'll show you that in just a minute. The EIDL Advance, we're going to review that. There's a Shuttered venue grant. There's an SBA Debt Relief, and there's also an Employee Retention Tax Credit. So that EIDL loan, this is the link for that. Again, you'll get the slides, or you can go to the sba.gov and find your way to this application. This is meant as working capital and normal operating expenses. You can use it for payroll for businesses that just really need kind of that extra cash right now. You do have to have less than 500 employees. Loans of less than $25,000 are not going to require collateral. Above that, they will. And again, it's a 30-year fixed loan. It's 3.75% interest for profit businesses, 2.7% for nonprofits. And of course, they have some additional rules. This is just an overview. That advanced program is what a lot of people are becoming very interested in. So maybe you applied for that EIDL the first round, you checked the box in regards to, I want the advance. You thought you were going to get $10,000. Next thing you know, you ended up getting $1,000 per employee up to $10,000. So this program is going to reopen. However, it is going to be there are some very specific rules associated with if you qualify. So if you have not applied for it and you did not get it previously, like in 2020, then you're not going to be able to apply for it now. Okay. It is meant to be for those basically for when they ran out of funds or people who just did not get the full 10,000. So let's say that you do fall into that qualifying factor of, well, I got it, or I got, 5,000, but I didn't get the other 5, or they ran out of money before I got it. You are also going to have to meet some additional requirements for some targeted criteria associated with it. So you're going to have less than 300 employees associated with your business. You are going to have to be located in a low income community. Now, that definition on SBA's website has technically not been stated. The guidance we've received is it's going to follow something else called new market tax credit areas. If that's the case, then basically everybody in the service coverage that we cover with Bland, Carroll Grace, and Galax will be eligible. I'm going to look to my partners and with and Bland it's to say, I think that, you all qualify as far as for that. And if that changes, we'll let you know. But again, that guidance is coming out and has not been stated yet. One of the other things is you're going to have to demonstrate 30% reduction in revenue during an 8-week period beginning March 2nd or later, right? So here goes back to those financial statements and that gross revenue that you need to be, you've got to be pulling it. You've got to know what you did in a quarter or 8-week period or per month. Because again, that PPP one, that's a 25% reduction. But in order to qualify for this particular second round program, you're going to have at least a 30% reduction. How do I know if I qualify? Well, SBA has promised that they will reach out to you. So they're asking you not to contact them for this program. So if you applied before December 27th, but did not receive the EIDL due to lack of program funding or received less than the $10,000, SBA is planning to reach out to you in order for you to upload that documentation for qualification, okay? So here's where I say that you need to be looking in your email on a consistent basis, including your spam folder, for anything that may come from sba.gov. And we're going to talk about fraud in just a minute, that there still could be, you still need to be careful, but make sure that you are looking for emails. To my knowledge, none of that has gone out yet. We are still waiting for, hey, those emails are going out. If we find out, we do put it on our social media channels that you should be expecting those emails.
And Mandy, Anthony here is Skyline. A couple of the nonprofits that I work with outside of the bank, we received idle advances or an idle loan. And I will say that a lot of times that email comes through as a general update to the borrower. There's an update on your file. They're very cryptic when they send the email out. And so ours actually set for a week just because I seen it and thought it was just a general update. And I didn't think anything about it. And so I actually run my nonprofit a week behind signing the idle loan because I thought it was just spam. So do watch out for the cryptic way, the EIDL emails.
Yeah. Again, like you said, Anthony, he's boards, he's a chairman or a board member of many nonprofits. And so he was giving you that piece of advice that keep an eye on it, and it comes cryptic. So you have to be on the lookout. There is a shuttered venue operators grant. This is for, those hit the hardest with live venue, live performances being shut down where we could not come together and watch those or be in those areas. There is a set aside for it. This is a grant program. Eligible applicants, you can be eligible to receive up to 45% of your gross earned revenue with a maximum of 10 million. Again, you have to show a decline in your gross revenue from 2020 to 2019. And there also is an additional set aside for businesses with 50 full-time employees or less. Just really quickly, the entities that will be eligible for this, live venue operators or promoters. Now, let me also say that you cannot be like a restaurant and you have live music. You actually have to generate ticket sales or majority of your ticket sales from those live venue events. Theatrical producers, I think the one that may be relevant for our areas are, maybe zoos. I know we've got a zoo over there in Fort Chiswell, and maybe, some museums. Motion picture theater operators. I love that terminology. It makes me think of black and white movies, but your local movie theater, they may be able to qualify. They do have some additional requirements. So this is a different date. I love all these confusing things. You must have been in operation as of February 29th, 2020 to qualify for this particular grant. And there is also a very tough thing right now called if you can have had a PPP 1 loan, but if you are going for a PPP 2 or basically any PPP loan after December 27th, you cannot get both of these. So you cannot get a PPP loan December 27th or after and the shuttered venue grant. This is causing an issue for some of those particular entities that may qualify because the portal's not open yet. So the portal for the shuttered venue grant is not open yet. And so you're kind of in a stuck momentum, right? My best advice to you is figure out where you're going to be the best off at, right? So if you look at the Paycheck Protection Program and you figure out that's going to be a better option for you, then go ahead and go for it. If you understand that maybe the shuttered venue is a better aspect of it, keep on it every day in regards to is it open? Is it open? And we have a website, we have some information we can provide to you. The eligibility, how you calculate that, a little bit different if you were in operation before January 1st of 2019 versus after January 1st of 2019. Again, we'll send this to you and send you some supporting information so you'll know. And as I stated before, the application process for this is not open yet, but that will be directly from the Small Business Administration. They will be issuing this as a direct grant to you, so that application will come through them. We have no guidance on when it will be open yet. They are trying to target smaller entities with 50 or less employees. This is very small to read. However, they are going to do a stair-step open of the portal, meaning that if you had 90% or more loss in revenue, then the first 14 days are for you. If you had 70% or greater loss in revenue, then the next 14 days. So it's a stair-step aspect to try to get those that were most vulnerable and hit the hardest eligible. It did include allowable use of funds, very similar to Paycheck Protection Program. You payroll costs, rent, utilities. You can do mortgage payments. You can do current principal and current interest, but you cannot prepay. The same with debt payments, although both of them have to have been in service by February 15th of 2020. Workers' protection expenditures. This one's a little bit different. You can actually pay independent contractors to not exceed that $100,000 annual, whereas with the PPP, you cannot pay independent contractors. So Shuttered venue grant, you'll be able to use it for that. Operating leases, insurance. You can use it for future advertising, production, capital expenditures, but it cannot be for the majority of it. So that has to be kind of a, second, third aspect. Do want to just mention this SBA debt relief. I did not change anything on this slide, Anthony. I don't know if you want to touch on it, and if you don't mind, real quick in regards to what this is about.
Yeah. So if you are an existing SBA client, a 7A or 504 client at a lending institution, you've probably heard by now. If you had that loan before March 2020. You've probably heard by now the Section 1112 payments, where the SBA came in and made 6 monthly payments for you for principal, interest, and associated fees. The second round Section 1112 payments are launching next month. Lenders have to have that information in by February 10th. So if you have a current 7A loan, depending, it would take too long to explain the approval windows that they have on that, but I can certainly put some information if anybody is interested. But for existing 7A clients approved before March 2020, a certain date there, you'll be entitled to 3 more months of principal and interest and associated fees payments starting in February. So that would cover your February, March, and April. To use Mandy's slide here, they are capped at $9,000 per month. So if your loan payment was $9,300, you would be responsible for the $300 above the $9,000 cap, unless you have some sort of workable agreement or modification with your lender. Loans cannot be in deferment. So if you're on a deferred plan on your 7A or 504 deal, the legislation talks about, discussing with your lender about coming out of deferment to get these payments, or getting the payments after your deferment has ended. Hard hit industries will receive an additional 5 months of relief. So if your business has a NASIS code of, there's multiple NASIS codes here, but if you're in the educational services 6-1, or arts, entertainment, and rec, accommodation and food services, support activities for mining and oil and gas, apparel manufacturing, clothing and clothing accessory stores, sporting goods, air transportation, publishing industries except for the internet, rental and leasing services, and personal and laundry services. Just trying to name some stuff that we see here in our region. If you're in one of those NASIS codes and you have an existing 7A loan, you're entitled to 5 more months of additional payments on top of that 3. So do check with your lender in those situations, and they just need to make sure that they have your NASIS code from your tax return, and that it's all plugged into the SBA system on their side, and you'd be able to receive those additional 5 months. So.
Thanks, Anthony. I appreciate you stepping in on that. And again, I knew the hard hit industries, when we did this last week, we had no guidance on that. I think you got that right after we had talked last week. And so it's, essentially if you have one and you get a forgiveness letter, or you talk to your lender, that's a possibility. So I do want to just mention this employer retention tax credit. And the reason I say mention is because this is a very intricate tax credit associated with employees that you can claim with the IRS. And you'll see, I have the big red letters, consult your accountant or tax preparer, because previously when you got a PPP, you could not apply for this employer retention tax credit. The new legislation changed that. So it allows you to go for both of them. And this can be a very advantageous avenue for some, payback to you in regards to the taxes you pay for your employees. Okay. So there's been some changes. Those you can now maybe get up to 70% of the wages for certain timeframes in 2021. It does exclude wages paid by Paycheck Protection Program. So because that's considered double dipping. Just remember, any program you're doing, they want you to use $1 for $1. You don't use, I'm going to use the Paycheck Protection Program and the EIDL to pay this one expense. You don't look at doing that. You make sure everything is set up separately, which is why we recommend spreadsheets or accountants or, separate bank accounts to look at those funds. Again, this is more of an intricate program that is available, can be very advantageous to you. I encourage you, if you have employees, to talk to your tax preparer about the possibility of applying for this. Wanted to just double check, go over again that unfortunately the pandemic and many of these programs has created the opportunity for many phishing scams and many emails. So you'll go back to what Anthony stated earlier. So a lot of times they'll come in encrypted, right? Or they'll be from SBA.gov, but the title may not tell you loan documents, advanced documents. So you really have to take a look at it, but you need to look at who it's from as well. So just be very careful when you are accessing those emails. We are providing on this slide, as well as the next slide, how to report disaster loan fraud. And that can happen to you in a multitude of ways. I mean, an individual's social security number could have been issued or used to try to access a fund. And then you have not only fraud against SBA, you also have identity theft against yourself. So keep an eye on those things. And if you have any questions, you can contact our office on how to proceed with those complaints. Very quickly, reminder, the Rebuild Virginia, that program did close on December 9th. However, if your application was in the portal and you did not receive funding, they are going to keep that portal open and available to wait and see if the states get further funding to replenish those funds. So if they do, then they will continue funding those applications in the order that they were received and being reviewed. No word on that, just letting you know that's what we know. So how can we as an SBDC help you in figuring all this out? We can review those eligibility requirements with the business owner on a one-on-one basis. We can direct you to available lenders. We can assist in reviewing completed applications prior to submission. We can also assist in calculating that gross revenue or loss, what goes into it. You would need to provide those records. So, if you call, I'm going to say, well, we need this, 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 and this, and those records to help you take a look at it. And then we can also review, analyze, and seek assistance directly from the SBA if we have questions about eligibility. I think our lenders have that kind of power as well, that a lot of times we have to get clarification too on the rules. And this goes back to just, saying, please show grace to everyone, because we're all in this together, trying to figure out trying to figure out how we can get you eligible. A lot of times that's the way I look at it. I want to make sure that everybody who is eligible and wants to apply can do that. Just to kind of, I'm not really going to go over this, but we are continuing to provide other resources as well through our Small Business Development Center office. And I know my partners in Withville are as well. I'm going to turn over to Todd here in just a moment to share a program that they have some funding left in. How do you get in touch with us? You call us at this main phone number, the 276-601-7727, or you email us at this number, this email address. What happens is all those calls are directed directly to Jenny Plant. She will talk to you. She's going to find out if you're already in our system as a client. Hopefully everyone that's on this call today registered, so we have you. And she's going to collect some basic information and then pass that on to the rest of the staff so we can give you a call back and talk about that. Let's say that I've got somebody that joined us from Smith County today. We do have some regional staff members, so they're available for you, and that'll be included in the slides I send you. I'm going to end this slideshow just so I can see everyone's wonderful faces. Todd, do you mind joining on a minute and just reviewing what you have available, what you all have available in the Wythe County area under CARES Act funding?
Sure. Thanks, Mandy, for the presentation. That was, I learned quite a bit actually that I didn't know. So that was excellent for us. And Anthony answered some questions for me as well as far as nonprofits go, and I appreciate that. Yeah, so we have a community development block grant here locally that we're working with our partners on the call as well, the Chamber and the Joint IDA. We received $800,000 from the state to administer grants for rent and mortgage relief. We have expended about close to just a little over $600,000 of that. So we still have roughly $200,000 left to get out. So if there's anybody from Wytheville on the call with county, please spread that word for us. If a business pays a rent or mortgage, they can qualify for this program. And our application is very simple, and we can walk you through that. But that's kind of what we're offering right now. And of course, we're doing some of the PPP consulting with businesses on, how to apply, but we are directing all of those inquiries to our banking partners because we don't want to. We're definitely not going to encourage somebody to apply. We don't want to be liable on the back end if they end up having to, pay what they thought was a grant back. So we're referring all those businesses to our banking partners, which we have quite a few of here locally. And that's worked out really great to kind of be that liaison between the business and the banking partner. So that's kind of some stuff that we have going on as an organization here locally. Be glad to answer any questions about any of that.
And I think you also said, luckily your organization is able to apply. Is there anything that maybe I missed that you all have a tip of that you would want to share with the group that we have today?
I really don't think so, Manny, because like I said, I learned a lot from the presentation. Actually, our banking partner that we work with that we applied for the first round was not requiring the documentation on the front end, like Anthony mentioned. So, but I can see where that would possibly get some organizations in trouble, because if you're on the threshold of the 25%, it's really close. And then you were, for example, you did get the loan, you started using it, and then all of a sudden you have to pay it back. That's something that I don't think anybody wants to get into. So I think the level of documentation on the front end is a very smart thing. And even though our financial institution is not requiring it, I think we're likely going to definitely do that. Just to cover all of our, things.
Right. Again, everybody wants to make sure that it's forgivable. You don't, the goal is not to pay it back. We want to make
That's
sure
exactly
SBA,
right.
we want to make sure the SBA pays the bank for that loan, not you. Right.
So one question, I do have a question for
Please.
Anthony or yourself. The EIDL funding on the first go around, there were a lot of businesses here locally that actually had to pay that back. But then the second round of CARES that came out, we had heard that EIDL was going to be forgiven to kind of that you would have to pay back. So don't actually start paying those loans back. Do you have any information on that, or Anthony?
So I think what you're heading at there is the EIDL advance, the up to $10,000. So for everyone on the call, if you received, I'm just going to make up a loan amount right quick. If you had a $100,000 PPP loan and you received the EIDL advance of $10,000, when you went to apply for forgiveness early on in the program, your forgiveness amount would be reduced by the amount of the EIDL advance that you received. I believe it was something called Section 1106 idle advance reduction, and that there was a lot of misconception about that in the market early on, a lot of information out there about it being a grant. And so Congress in the new Economic Aid Act repealed that. So all forgiveness decisions that's being processed from a couple of weeks ago forward, they don't have that idle advance reduction piece to worry about. But the ones that were processed beforehand that had that idle advance reduction and the borrower has paid that back, or the borrower has entered into a modification plan with the bank, the SBA is soon stepping in to pay those off to make it right. Actually, during this call, I received an email from the SBA saying that our Richmond district office does not have an ETA on it just yet. So I would advise, I'll be careful how I advise this, but if you're currently on a payment plan with your lender on those EIDL advances, I would just recommend reaching out to your lender and discussing it with them, and just, saying, hey, what do I need to do? What are the next steps? Do you need anything from us? Just so you have that contact line. SBA has told us here at Skyline that they're pretty much going to send us a list of the idle advance reductions that we had on PPP loans. We're going to go in and confirm the amounts and get the payoffs or reimbursements back to the borrowers, hopefully before the end of February is what we're crossing our fingers for. So I just say, if you were affected by that, reach out to your lender, let them know it's on your radar and what you need to do in case you're on a P&I plan right now to pay off that up to $10,000. Okay.
I think that sounds like that was what you were addressing, right, Todd? Was that
Yeah,
advance?
that's correct. That was good information. Thanks, Anthony.
Oh yeah, yeah, and it is, and I would reiterate to what Anthony said. Reach out to your lender that gave you that original PPP, especially if you have done, if they've issued the loan modification, meaning that you're in pay back plan right now, because you don't want to necessarily not pay it and there be an automatic credit issue, right? That can happen because banks a lot of times have automated credit reporting. And so you don't want to make that happen. So reach out to your bank, find out what the best option is for you. Teresa, if we can go back to the chat for questions and find out what else we need to address. And also whoever it was that asked that one question we started talking about, if they want to unmute and get more clarification, we can do that, or we can do it on an individual basis.
I don't see any new questions that haven't been addressed, but if Sharon would like to elaborate on her question, she can unmute and ask Mandy.
Right. I was just wondering, that's because David and I file joint taxes, but we have individual businesses.
Right.
So
do the individual, do y'all do an EIN for each business, or do y'all use your social? Yeah.
No.
So you're actually, you've got two separate businesses based off of that EIN. And so, Anthony, Elizabeth, correct me if I'm wrong, you're going to be, depending on if you qualify based off of the reductions and other things, but
right.
It's two different applications for those different businesses. You may be submitting some of the same paperwork to both of them, but it's two different applications.
Right. We did that originally. So It was originally we filed it separately. So, okay. Yeah. Just wondered. There's something else I did do. We had given COVID pay to some of David's employees who were out. And I just did my 941s, and we got back a lot of money on 941s. It was the most confusing form I think I've ever tried to figure out. The accountant finally did it for me, but it was well worth it when, we had finished using the PPP money, so we could take that credit. So that's another way to save some money too.
You talk about that employee retention tax credit that you.
Yes, it's on your 941.
Yeah.
Your employer's 941. Mm-hmm. And for the 3 people we have paid COVID pay to, you get that, plus you get a little bit of their FICA, and you get some of their health insurance money too. So it was a really big credit actually.
Yeah.
So anyway.
So that's why, because that's a separate fund, right, that you're taking a look at and utilizing. That's why you cannot use PPP funds to pay for that time off, right? Because that would be a double dip. So again, having a relationship with your accountant or your tax preparer on some of those very intricate details, we're happy to review, okay, well, we think maybe this is what you need to take a look at. There are some things that, again, like I say at the very beginning, I'm not a CPA, so I'm not going to try to say this is what you do in that aspect of it. But we do want to make sure that you understand what programs may be available to you, and for employees, and continuing to be open and having them working. So,
we're also going to face a higher minimum wage coming up, so that's going to be a real trick too for while we're down. Business is down anyway, so. Even in Virginia, I think in May, we're going to have a higher minimum wage. So that's going to really affect the bottom line a little bit more.
Yeah,
so.
You are correct. Yeah, I think there's an initial minimum wage requirement. It's a stair step, I think, through the next 2 to 3 years, but there is a minimum wage requirement that's going to be instituted, if I remember right, May 1st or May 31st.
Yeah.
So. Teresa, have we had any more questions coming in?
Yes. She said, wondering about in-kind revenue for a nonprofit. Should that be included in gross revenue?
I'm going to have to go back and look at my guidelines. I'm also looking to my partners. If I remember right, I don't think in kind is counted, but I'll have to go back and look at the very specific guidelines. Is that, I'm thinking, could that person maybe reach out to us on an individual basis or let me know who you are?
Jody, could you do that?
All right. And Teresa, if you don't mind writing down that contact name so that we can reach back out, we'll have your contact information and what that question was.
Okay, and we had another one come in. Stepping back to the Shuttered venue grant, would you mind clarifying the note about not having received a PPP loan on or after December 27, 2020?
Yes. So, and I'll look to Anthony and Elizabeth as a partner on this to make sure that I'm verifying. So there was a date of December 27th that if you got or get, basically if you get any type of Paycheck Protection Program loan, forgivable loan, following December 27th or after, you will not be eligible for a Shuttered venue grant. So the reason I say general Paycheck Protection Program is because what if you didn't go for the first one? You know, so I can't say if you got a PPP 2, then you don't qualify. Because if you're going for a first one, a PPP 1, if you get that after December 27th and you do that in this round, then you would not qualify. Does that make that more clarifying, even though I added some commentary to it?
Yeah.
Yes.
This is John Matthews from the Joint IDA in Wythe County. So I guess just making sure if someone were to have received PPP prior to that date, they would still be eligible.
That is correct. Yes. So let's say that they did PPP 1 and, you know, all that's gone through. They're eligible. It's just the December 27th, 2020 or after that they are not.
Perfect. Thank you.
Is there anybody else that wants to unmute and ask a question as well that maybe you don't have the ability to chat? You're welcome to do that. I know we are a few minutes past 12 going into lunchtime, but I have time to stay on to answer questions.
Hey, Mandy, Anthony here at Skyline. Just wanted to mention Elizabeth Hash is on the call. She's on our SBA team. She's based between Wytheville and Independence. Today she's in Wytheville. Since this is, we've got a lot of Wythe Blend businesses on here and Wythe partners as well. I just want to take a second to introduce Elizabeth. She also helps lead the SBA team and PPP efforts here at Skyline National Bank. And she's located there at our Wytheville office there, I think on 4th Street. So Elizabeth, if you want to say hey and introduce yourself.
Yeah, hey everybody. I see some familiar faces and names on the call, but happy to be a part of Skyline and you know more accurately right now, happy to be part of our PPP team. So if you guys have any questions, I'm around here in Wytheville pretty often. So if you need anything, feel free to reach out to me. Mandy can send out my contact information too to everybody, along with Anthony. So if you guys have any questions or if I can help you with anything, please don't hesitate to reach out. Thanks.
And we'll be happy to include that as well as your application process on this follow-up email. Well, do any of our partners, Joint IDA, Downtown Wytheville, Chamber of Commerce have any additional information they'd like to share or address? Well, if there's nothing else, I'll stay on just a few minutes in case anybody has another question or needs to ask something. But I do want to thank each of you for joining us today. We are, while I hate the circumstances around what we're doing, we are happy to be providing this information to you. And again, Jody, we'll reach out to you on an individual basis to see if we can answer your question more specifically. I just want to look at the guidance before I make that question. Again, so much information, it's like drinking from a fire hose. So thank you all for joining us today. If you have any questions, the contact information, I'll be sending out slides as well as how to reach us on an individual basis. Feel free to reach out to your partners here, Jennifer with the Chamber of Commerce, Todd and Jeremy with Downtown Wytheville, John with Joint IDA, and of course, your lending partners as well. So I hope all of you have a wonderful day and enjoy the rest of your week.
Thank you, guys.
Thanks.